Well, good damn afternoon, Americans. Jericho Green here with you once again, but I am not alone. I have a very special guest. If you guys have been following me for at least a year, you know that I've done some work with Noble Gold, and I'm very happy with it. That's why I continue to do business. I believe in the product, and I've learned a lot. I've learned how precious metals play into our everyday lives. And we know gold and silver, that's been around for millennia. But in today's world, especially with things going the way they are economically, you really need to tune in to the precious metals, because even though we have all this Bitcoin and these other things, it's still all about those bedrock precious metals. And with me, I have none other than the CEO of Noble Gold Investments, Mr. Colin Plume. Thank you, Colin.
Nice to be here. Thank you, Jericho. But pleasure. Great to be a sponsor, and nice to be here today to talk about real money, which I love. I love talking about. So excited.
Yeah, if you're going to have something to talk about, let it be real money. So, like I was saying before, I'm not too well versed on this. I've been learning as I've had you guys as a sponsor, but top of mind, as they say, for everybody is inflation. Yeah. Especially those of us who aren't in the higher tax brackets. We really feel the crunch. We really feel the squeeze of the prices of everything going up. And you might look at individual price increases. Like there's somebody sent me an email the other day, and they were talking about they paid $3.79 for one item, and now a year and a half later, that item is $4.99. A $1.20 increase. That's not a lot, but you multiply that by all the things you have to buy, especially if you have a family. All of the things you have to buy, because you do have to take care of your children. The law says so. So all of these things that we're paying for are increasing, and the stock market going down, our 401ks. Fortunately, I rolled mine over before, all these horrible things happened in the last week or so. But if you can just tell us about inflation and how the precious metals play into it, how can we maybe use those to combat it?
Well, it's interesting, Jericho, because before the government started to report inflation in the 8% range, I used to always, and this is a common term, they used to call inflation the silent killer, because it was never reported. I mean, never. They would take out the last year. If you go 20 years before that, they've basically been telling us inflation's at 2%. 2.1, 1.9. So I've always just said, like, it's higher than this, but it's been a sort of silent killer to people's portfolios. And if you don't think about inflation when you're thinking about investing, you're really hurting yourself. And keeping money in a bank, which is what a lot of us were taught, saving money and keeping it in a bank, what our parents taught us, or our grandparents, is really a surefire way for disaster. It really doesn't get you to where you need to be. And the thing about gold, when I started in gold, Jericho, is I collected silver coins as a kid, and my father collected silver, and so I knew about silver. But you're just rubbing silver coins together, just a little bit here or there. But the thing that piqued my interest in gold is when someone told me this story about, if you think about, we used to use gold. You used to have a 1 ounce gold coin, and we used to use them in circulation. And that 1 ounce gold coin was a 22 karat gold coin. And it was something you could use it in money until 1933. So think about 1920, a $20 gold piece. You could go out, you could have bought a suit for yourself. You could have, bought groceries. You could have bought things for the house. You could have taken your wife out to dinner, all with that one gold piece. Think about that. A $20 value, 100 years ago, basically, could have bought all those things, right? Today, what can that 1 ounce gold piece do? It can do exactly the same thing, if not more. You could buy 2 or 3 suits, depending on where you're getting them from. You could take your wife out to a very fancy dinner. You could put groceries. So the buying power, that's the key element to investment, is you want to sustain that same quality of life that you've had for your whole life. And so that's why gold bugs are always so strong on it, because it just keeps up with that same quality of life that it did, 100 years ago. And, in theory, it should continue to do that 100 years from now, right? It should be able to cover the same thing. Now, it'll be interesting in 100 years from now if anybody's wearing suits anymore, because we're kind of going in the opposite direction of wearing suits. But, just take anything that we're buying day to day, even gasoline prices going up. I mean, gold has definitely held its value in terms of the world and in terms of buying things that we need day to day. So it's a great hedge right now. And, obviously the markets are scary. You have inflation in the 8% range. You have the Fed just they keep raising interest rates, which doesn't really help. It hasn't helped us yet. And so you have this predicament where people need to make a return. They need to think about the future, but they don't really know what to do. And so a lot of the fundamentals of investing is sort of coming back into play. And like you said, like, people are going away from crypto, they're going into stuff that they know. And that's why, gold and silver have really been a thing that a lot of people are talking about right now in the news.
Yeah, and in uncertain times, you need some certainty, and gold and silver is that. Now, if you guys like what you're hearing, you want to know more, noblegoldinvestments.com, also 877-646-5347. Again, keeping with current things, inflation, gas prices, and can you maybe speak to those of us out here who, like I mentioned earlier, or before we started, I rolled my 401k over and kind of got out of that market before all these things are happening. So people who still have their 401k out there, how can gold and precious metals help them?
Yeah, so I mean, it's diversification, right? I mean, I think the closer you get to retirement, you want more certainty. And, listen, the markets overall have been down. The stock market's down, anywhere, depending on what, index you're in, you could be down 18, you could be down upwards probably of 29, 30% right now. Gold and silver are also down. They're not down as much, but the whole market is down. Now, what's going to happen, in my opinion, what's going to happen by, I think, second or third quarter of next year is I think the Fed does a full reversal of what they're doing. I think they cut interest rates substantially. I think we're bringing back quantitative easing. I think they're going to start printing money again, which is exactly what they did in 2009. In 2009 to 2011, they went into QE, quantitative easing, phase 1, phase 2, and phase 3, and they just started just dumping money, getting cheap money out there. So I think they're going to do that next year to try to reverse it. Obviously, there's some elections coming up too. I don't think anybody that is in power right now wants this kind of economy going into our election season. So I think that they're going to do a reversal. They're going to try to get more money out there, and things will change. And that's when I think metals will really start to skyrocket in terms of prices. During the pandemic, gold hit 2,070, silver just touched on $30 an ounce. But if you look at the fundamentals, especially silver, I mean, silver makes no sense where it is right now price-wise. It's so undervalued. I mean, everything that we're doing business on, all electronics, solar panels, electric vehicles. I mean, there's just thousands and thousands of uses of silver. And it's expensive to pull it out of the ground. So, it's definitely a great industrial metal to own. Now, gold is more of a safety play, right? Gold is more stable. There's only enough gold in the whole world to fit in 2.5 Olympic-sized swimming pools. So
wait a minute, Colin. Wait a minute. Say that one more time.
Yeah,
how much in the entire world?
Entire world above ground. there's only enough gold in the whole world to fit 2.5 Olympic-sized swimming pools. So it's not that much. If you think about all the
Wow.
central banks that own gold, we have obviously, if we still do, we supposedly have the most gold in the world. But all the countries, Russia, China, Kazakhstan, all these countries have been buying tons and tons of gold, and they're long-term holders of gold, right? They're not sellers. Then you have all the stocks that are supposedly backed by gold. They have to have a certain amount of gold too. So there's a lot of buyers of gold out there that can never sell. It doesn't make any sense for them. And that's why it's so entrenched, almost like buying insurance, because you have these really long-term holders of gold that have no incentive to sell. Now, the biggest blunder in central bank history happened in Great Britain in 2002. And if you watch the price of gold, it's well documented. But basically, they sold like 80% of their gold in 2002. And it's well documented. It was one of the worst mistakes that they've ever done. And they basically destroyed themselves. And even now, I mean, you're seeing the repercussions of their economy based on what's happening. But they sold, and they never should have sold. There's no reason to sell. It doesn't make any sense, because also, if you need money, you can borrow against gold. Mm-hmm. Central banks after World War II, Germany, a lot of countries have had gold in the Bank of New York stored here, and they stored here. And then if they need to borrow against it, it's the perfect leverage. So it's like selling the worst asset. Like, there's no benefit. You can borrow it at a great rate and make and use that money to use it out in the market. So it doesn't make sense to ever sell it. But they did, and it cost them a lot of money. So, gold is really one of those stable assets. It's not as volatile as some of the other metals, palladium and silver and platinum. It's just very kind of steady Eddie. But I think people are really, really loving it. And for people that don't know, we don't do the stock form. We don't do leverage accounts. We just do physical metals, right? You own it. This is a silver coin that I had. It's a 5-ounce coin. It's a fun coin.
I got one too. Mine's only 3. Yours is bigger.
Yeah.
So I got a 3-ounce right here.
Oh, you don't have a 5 cent you a 5-ounce coin before. You got a 5-ounce back there. No, that's the coin you have is the Virtue coin. That's a limited edition. There's only 2,000 of those coins that were made. Really cool coin. But the idea that you have something tangible, wealth, is very desirable in these kind of times where people are nervous. And, there's countries right now where they're running on the banks. It's happening in Lebanon. Mm-hmm. I don't know if you saw that horrible story about that woman. She basically had to rob her own bank to get her money out. With a gun, but she was trying to get her money. She wasn't robbing to get other people's money. She was trying to get her money out. So that's why, fractionalized banking is so scary for a lot of people. And that's why owning gold and silver feels good when you get it. People really like it. So we don't do anything leverage. It's yours. You just buy it from us, whether we store it or you send it to you, it doesn't matter. It's your metal. We don't own any possession of it. So and that feels really good as a business owner too, to know that it's an asset that you have and you're in control of it, so.
That's very, very important. It's very good to hear, because as a normie, when you get into investments and investment companies and gold and silver and precious metals, it feels like this big, huge, complicated thing that we can't understand. Right. So to have a business like Noble Gold that's going to take the worry out of that, you for no pun intended, but you can't put a price on that. That peace of mind is priceless. Now, I don't want to scare everybody and get all doom and gloom, but I want to ask you 2 things. Number 1, how high is inflation now? And number 2, how high has it been in the past?
Yeah, so if you there's a good website called shadowstats.com. There's a guy, John Williams, who's a Dartmouth graduated economist, and he is always, I've interviewed him a number of times and we have a personal relationship. And, he's always said that, if you take the CPI numbers and you go back to when Ronald Reagan was in office, they've pulled out a lot of different ways to keep the CPI low. So he's when we had inflation a year or 2 years ago, when it was at 2% or so, his numbers showed anywhere from 8 to 10%. So now,
Wow.
sitting at 8%, his numbers are showing anywhere from 15 to 20% of actual inflation. So that, those numbers obviously are sort of scary, but I think it's more realistic, whether it's somewhere in between, we're sitting at 12 or 13. But it's definitely in that range. And I think anybody that's going to the supermarket or sees their energy costs skyrocket, they know that there isn't anything that hasn't gone up substantially over the last year. And oil is going to be interesting. Russia is one of the main producers. Obviously, they're going to be under these sanctions for a long time, and so it's behind the scenes. What Russia and China have been doing, about 60 days ago, Russia offered bonds for a bond for their largest oil producer and also their biggest mining company. They offered those bonds in the yuan. And that was the first time that had ever been done. And all the bonds was between $5 and $10 million each. All of them sold out pretty much immediately. I don't know where the investors were from, if they're only Chinese investors or, other parts of the world, but those bonds sold very quickly. And that goes to what, China and Russia and a lot of the BRIC countries have been trying to do, which is they want to go away from the dollar as being the reserve currency. So in some ways, the sanctions have sort of allowed Russia to kind of move in a direction they've wanted to go anyway, and moving away from the dollar. And that's not good for us. The more that we lose the ability or the enticement to have our bonds stored in central banks, the central banks continue to want to go away from using the U.S. treasuries and our notes, the worse it's going to be for our economy. And it's already trending down pretty substantially, but that is something that we need to look out for, because if we see more of these bonds coming out that aren't in the U.S. dollar, that reduces our stranglehold on the world in terms of our currency. So there's a lot of people that are concerned about where our dollar is going, when this will stop. And, my opinion is inflation will be here in this range for a long time. I don't think it'll be in the 8% range. I think we will see it drop in the 4 to 6% range in the next, 12 to 18 months. But I don't think getting back to 2%, I don't think we'll see those numbers for many, many years, if ever again. So, putting money in a bank account, and it's funny, Jericho, now it's like, you probably remember, like the banks before would offer you like 1/4% or like 0.5%. Now they'll offer you like 3%. Well, it was like, well, do I want 3% if I'm losing 9%? Like it doesn't seem that good. 3%, a 3% offer to be in your bank if inflation was 6%, okay, or 4% or 5%, but the 3% on my money and inflation is 9% and it's probably higher, doesn't really feel like much of an offer. And that's what the banks are doing at this point.
So what makes another country, say Russia's bonds, more appealing than ours? Why are they getting away from our dollar? Because they weren't before. So what's wrong with the American dollar now?
Well, I think that in that specific situation I mentioned, like those two countries are working together, where many of the other countries in the world won't do anything with Russia, right? So they're not gonna buy anything from Russia, but China seems to be okay with it at this point. So, I think for Russia, they need to raise money, so this was enticing for them. Putin probably wanted to see who would be buyers of these bonds, like what's the demand out there. And most countries would question those bonds, right? It almost, when you buy, I don't know if you remember this company, Alibaba, out of China, but when they evaluated that company, they didn't know what the evaluation should be, because you can't necessarily trust the way China values things. The same thing can be made for these bonds, these Russian bonds. Like, who's to say what the return should be, what the risk level should be? Russia's probably going to tell you they're the safest bonds in the world. But you know, you don't really know because you don't know the underlying companies because no one's ever had that information before, right? Whereas US bonds, either they're backed by the federal government or they're backed by some, you know, you can buy local bonds in your state that you know, you could buy a bond. Let's say a school down the street from you wants to build, you know, something at the school or they want to add on. You can buy a bond in that way, and you kind of know what you're getting into. So, you know, there's definitely some significant risk with buying a bond from another country, especially like these two countries, because you can't really trust what they're reporting. But listen, there's people out there that are willing to take that risk, and they're buying it. But you know, the biggest bond buyers in the world, you know, the trusts, you know, all these foundations, they're not going to touch any of that stuff, right? Their job is to be safe and secure. So you have a very smaller group of people that are willing to take on that risk, because at the end of the day, like, you know, how would you collect if they stop paying, right? What are you going to do?
Yeah.
What are you going to do with Russia if they go, well, you know what, we're not going to pay this anymore?
Yeah.
And years back, you know, I can't remember how many years ago, there was a hedge fund that actually bought some bonds from Argentina. I don't know if you remember this. And Argentina stopped paying, and this hedge fund was sort of holding them hostage and basically like, listen, we can go into your country and start, you know, acquiring some assets because you owe us these bonds, right? So that's the only way you guarantee that someone's going to pay on those bonds is if you go, hey, there's collateral behind this and we're owed money. I don't think you're going to be able to pull that off with Russia or China. They'll just say, forget it, good luck, you know, getting payment. So it's significant risk on these things, but these are things that are happening behind the scenes with Russia and China. They are trying to go away from the dollar. So these are some of the behind the scenes actions of the sanctions that we have here. And I'm not saying we should do sanctions. Obviously we need to, but these are how money is moving now. These are some of the ideas that are happening in these countries. And it is going to affect us in the long term and the strength of our dollar.
Can China and Russia, maybe combined, maybe they come together as these super villains, can they devalue our dollar enough to where, really, to be honest, where it takes us out of first world status?
Well, China has they have more debt of ours than any other country in the world. So it would come down to China going, all right, we want to start getting collections on some of the debt that you guys have. We're not going to buy any more bonds from you guys. I mean, if they stop that, it would significantly affect the value of our dollar. They really could devalue us and put us in a very bad predicament, because obviously we're just living on debt, right? We're $31 trillion in debt as a country. So we need buyers. We need buyers of our debt. So China could absolutely do it if they wanted to. Now, the flip side is that we buy a lot of their goods and they actually buy some of our goods. So they're sort of incentivized to not destroy us as a country in a way. So it's just a matter of like I think they're going to do the slow play, which is what China does, is they'll continue to stay out of, China wants to stay, they don't want anybody talking about them. They just want to continue to do business. They want to dominate. They don't want to make headlines. And they have an unbelievable workforce, unbelievable amount of people in that country. So they can definitely force their will if they want to. But I think they're just going to slowly do it over time. I don't know if it'll be a full move, because obviously they want access to our country and all the goods that we're buying from them. They don't want that to slow down either. So yeah, it's kind of it's a slippery slope with China and the US in terms of our relationship.
Okay. And don't forget, people, 877-646-5347 or noblegoldinvestments.com. Now, I'm so glad that I have you on here, Colin, because, okay, now I know you're a finance guy, but I'm going to tie it into that. So we have Pelosi and her group going over to Taiwan. China doesn't like that. Let's say China invades Taiwan, which is a very real possibility. And the resident of 1600 Pennsylvania Avenue has said, we will protect Taiwan militarily if China encroaches on them. So if we end up going to war with China, which is basically what's going to happen if they mess with Taiwan based on what our federal government has said, what would be, and maybe this wouldn't happen, maybe it wouldn't, but 5-10 years ago, there's a lot of things that we said would never happen that are happening right now.
That's true.
For sure. So maybe this wouldn't happen, but what would be the financial ramifications if America said, no, China, we're not paying you back the money we owe you. No, we're not going to do it. What are you going to do, China?
Yeah. Well, I mean, then we're probably going to war. I would say that would probably be the most likely scenario of us going to war is we don't pay back the debts. They're the biggest debt we owe, right? I mean, we don't owe anybody nearly what we owe them. So yeah, it is an interesting situation. What's going to go on with Taiwan if we would get involved there? The hard thing about not paying back debt is you're sort of setting a bad precedent, right? Because we have countries that owe us money too, and we want to get repaid. So it's hard to think about that. Also, to go back to what I said earlier, China could, in theory, say, if you don't want to pay back these bonds, and we are going to take some of the assets of the U.S., right? We could, in theory, take some of the land of the U.S. We could, they could, and it would go to the courts, right? I mean, that's why you have courts. I mean, the courts would decide, and that's what happened to that hedge fund in Argentina. They went to the courts, and the courts were like, listen, this hedge fund is owed on these bonds. They need to be paid back. They get paid. So if we went to a global court and we weren't paying back our debts, China could come in and say, all right, we want, I'm just throwing out Mount Rushmore, or so, I don't know if that's what they go after, but they would go after things that they think valuable. Fort Knox, maybe, I don't know what they would go after. Probably, I mean, if there's gold there, that's where I would go. That's the bigger issue, is that if you set that precedent, we don't pay, then they could come back and say, this, some of the land here, some buildings here, some of the things that we own, could be theirs. Another thing that people don't know about, a lot of our embassies all over the world for the US are in very valuable real estate. We have an embassy in Tel Aviv. I know, under Trump, we moved the embassy to Jerusalem, which was like, an unbelievable moment.
Huge. Mm-hmm.
But we still have the embassy in Tel Aviv, and the Tel Aviv embassy is across the street from the beach in Tel Aviv. It's a full city block.
Damn.
It's worth, it could be worth $1 billion. It's worth anywhere from 500 million to $1 billion. So, what if China says, we'll take that, we'll take that real estate in Israel. We'd like that. It's a good piece. And we have embassies all over the world that we own. So we own a lot of valuable real estate that no one really thinks about. So it's not something we want to mess around with. We got to be careful about how we treat that relationship. So as much as we've threatened, I think in some ways that we would do something there, I think in a lot of ways, I don't think we're going after China. I think we would avoid it at all costs. Mm-hmm. Maybe do some type of sanctions. But I think overall they're too big for us to mess around with.
Okay. Well, I appreciate it. Thanks for answering that, because I've thought that for a long time, and not knowing a lot about finance, but thinking, well, if we just said no, right, what could happen? So I'm glad that you answered that. So we've talked about the company and what you guys, the precious metals and everything, but how can my audience get involved? What can my audience do to take advantage of this?
Yeah, so you can buy gold and silver from us with cash, or you can buy it in an IRA or an old 401k. If you do an IRA, we do all the paperwork. We're here. We have a full team. We work 6 days a week. And it's hard sometimes. The custodians, the big boys, don't always want to release your money, even though it's your money. We fight with them all the time, but we have a team that does that. So if you want to do an IRA, that's something that we obviously specialize in. And you know, once you buy metals from us, you're a customer for life. If you ever have questions, you can always call us. We don't charge annual fees or anything like that. We just get paid when you buy the metals from us. But yeah, we've had clients that bought IRAs from us 5, 6 years ago. They call us, they have questions, because there's a lot going on with a retirement account. We're always around to do that. You can always get metals if you just have cash and you want to get it to your doorstep, you know, or if you want to store it. We ship it in a nondescript package, and you know, we handhold the whole process. I think people have bought from other people before, and they've done okay. And you know, sometimes the metals aren't what they thought, or the delivery wasn't great. You're not going to have that experience with us. I mean, we really, you know, call you, the tracking number, the sales associate calls you, we follow through. We're all the way to the doorstep, right? We make sure you get it. We tell you, open the package, you know, make sure everything's there, check the quality. You know, we do all of those things to make sure it's exactly what you purchase. And we really pride ourselves on the quality of the product that people are getting. I mean, people are going to get, you know, really quality products. And then, you know, just having if you just want to learn about what we do, it's just a great, you know, I think the thing is, I always tell people is just call in, talk to the team. You're going to like everybody you talk to. I promise you that. Everyone at our company is involved in precious metals. They all own some. This is stuff that this is an investment they believe in. And so I think the first thing to always do is just to have a conversation, and it's going to be a conversation like this. We're not a high pressure environment. We really focus on customer service. I'm sure you've, you know, had people call and say they had a good experience with us. And that's literally the most important thing for me as the CEO, is to make sure that people really enjoy the experience. And from start to finish, from, you know, the first person they talk to the last person, you know, wherever, everyone in the middle. We have a very, you know, friendly environment, and, you know, we want people to feel comfortable doing this. As you said at the beginning, it's like you're new in investment, and, you know, talking about 401ks, I always, you know, when I was doing a day-to-day and selling years ago, I'd look at these 401k statements, and they do a great job of making it so confusing, right? I mean, it's unbelievable how confusing they make these statements. You don't know who to call. You know, what if you got a question? What's this fund I'm into? What they do that on purpose to make it difficult, and sort of, they don't want you to think. And unfortunately, in this day and age, you need to be looking at your money, right? I mean, you need to know what's in there. You need to know what it's invested into. So, you know, I think gold and silver are much simpler to understand. And I'm not saying, you know, you shouldn't keep some money in stocks and you shouldn't buy some real estate. I do all of those. So it's, you know, it's diversification, you know, and picking the right time to get an investment that is a little simpler to understand. And then, you know, I think the timing is good, and obviously nobody knows, but I think in this world today, limited supply items, things that people, I mean, gold, the industrial uses have skyrocketed. You know, even in pacemakers are using gold. I mean, there's so many uses for gold now that weren't there, you know, 20 years ago or even 10 years ago. And the same thing for silver. So they're really using these in industry now. So that's the thing that really gives me excitement about metals, is you've had the growth in metals for years. Now we have the industrial components that it's just being used. I mean, cell phones, I mean, all this stuff, they have gold and silver. So I think it's a great time to get into these assets. And, you know, and the last thing I'll leave you with, we were talking about how much gold there is above ground. Even with all the mining companies all over the world, and, you know, most countries have some kind of gold mining, gold production only grows by 1 to 1.2% per year. So unlike other assets where they can just print them out of thin air or make them easily, the supply of gold is only going to go up by 1% a year. So that's a good thing for someone that's holding gold, because there's just not that much of it that they can mine, and that's a real benefit to an investor. So you know, that's one of the reasons I really like this asset. So but yeah, anyone, we have guides on silver, gold. Anyone that has questions, just call us. We'll send you out some free information, and I think you'll really like our company. And even, you know, Jericho, I tell people this. My dad came out of retirement. He's bored. He doesn't play golf. Well, he does, but he's horrible at golf. So he came out and he talks to he's on the phone, and he helps people. He's 76 years old. You know, served in Vietnam. and great guy, love metals, fun, and loves talking to people. So we got age range from, you know, people that are almost 80 years old all the way down to, you know, people in their 20s working for us. And you know, we love this stuff. We love metals. So it's exciting.
That's awesome. So it's really a family business. You got Plume Senior on the phones.
Yeah.
That's great, man. And like you were talking about the customer service, you know, we talked about a lot of big and scary things, but it comes down to customer service. If people feel they're being taken care of and they're being taken seriously, that's huge. And that's part of the peace of mind that people need, you know, especially, you know, a lot of people might not be well versed in this. So there's a level of trust, you know, that you have with a company like this. And that's great. And I just can't say it enough. Customer service is huge, and it looks like you guys nailed it. And yeah, you know, hedge your bets with precious metals. Get involved with this, people. NobleGoldInvestments.com, 877-646-5347. Don't end up like the lady in Lebanon. You don't want to have to go and hold up your bank for your own money. And I know we're big bad America, but we've had hard times here before, and it can get pretty scary. So to avoid that, you know, take part in what Colin's offering here. Thank you, man. I really appreciate it. You know, now I can put interviewing a CEO on my resume. This is awesome.
It's fun for me too. Thanks so much. Appreciate it. Till next time.
Yeah, man. Thank you very much, you guys. I'll put a link in the description box to all of this stuff, a website, a phone number. Check it out. I appreciate you guys being here. I am Jericho Green. I'm out. Thank you, Colin.
Thank you.